You've worked your entire life for this moment. Every paycheck, every promotion, every year you trusted the system. You put money into your 401k, believed in compound growth, followed the rules. And now, one man is looking at your portfolio and saying something that should stop you cold. You may be heading straight toward a retirement crisis. His name is James Harrington. 40 years in the markets. Built and sold a multi-million-dollar software company. Served on corporate boards. Managed real capital. And today, he's sounding the loudest alarm of his career. Because the financial world that made retirement easy for decades is gone, zero interest rates are gone, easy liquidity is gone, the old belief that bonds will protect you when stocks fall has already been shattered. The data now shows that nearly 60% of American households are at risk of running out of money in retirement, not because they didn't save, but because they're following outdated rules built for a world that no longer exists. And according to James Harrington, 2026 will expose that reality in a brutal way. He begins with the 401k illusion. Most Americans believe their 401k is a strategy. It isn't. It's just a container. What truly matters is what's inside that container. And right now, most retirement accounts are overloaded with equity funds and target date funds designed under assumptions that are no longer reliable. For years, the classic 60-40 portfolio worked beautifully. But when both stocks and bonds fell together, that safety net disappeared. James Harrington calls this the sitting duck scenario. Automatic contributions, passive management, and no real understanding of what you own. Then comes the yield trap. After 2 years of higher interest rates, investors rushed into money market funds chasing 5% returns. It feels safe. It feels smart. But after taxes and real inflation, that yield quietly turns negative. Purchasing power erodes while investors sit in cash waiting for the perfect moment to re-enter the market. History shows that the best market days happen during the worst volatility. Miss just a handful of them, and your long-term returns can be cut nearly in half. According to James Harrington, cash is a position, but it is not a strategy. The next danger is what he calls the inflation deception. Headlines may say inflation is cooling, but prices haven't gone back down. They've simply stopped rising as fast. The average household is still spending thousands more each year than before 2020. For retirees withdrawing income, that gap compounds quickly. A 4% withdrawal rule becomes 5%, then 6%, simply to maintain the same lifestyle. And when healthcare costs rise faster than everything else, the math becomes unforgiving. Bonds offering lower yields than inflation don't protect wealth. They slowly drain it. Above all of this hangs the debt doom loop. National debt has surged past historic levels. Interest payments alone are consuming enormous portions of federal revenue. To finance that debt, more bonds must be issued. More supply means higher yields. Higher yields mean falling bond prices. Falling bond prices hurt conservative portfolios. It's a cycle that feeds itself. And in 2026, James Harrington believes the idea of a truly risk-free asset is more illusion than reality. But the most dangerous threat isn't policy, it isn't inflation, it isn't debt, it's behavior. Decades of research show that the average investor underperforms the very market they invest in. Why? Because fear and greed drive decisions. Investors sell at bottoms and buy at tops. During crashes, panic takes control. During rallies, overconfidence returns. And for retirees withdrawing income during a downturn, those emotional mistakes can permanently damage a portfolio. James Harrington calls this the behavior gap, and it silently destroys wealth year after year. So what's the solution? He calls it the dividend fortress. Instead of chasing price appreciation, focus on cash flow. Own businesses with pricing power. Companies with strong balance sheets. Firms that consistently grow their dividends year after year. Income that flows into your account, whether markets are calm or chaotic. Add strategic cash reserves. Diversify intelligently. Remove emotion from the equation. Build a system that works even when headlines scream crisis. And before you move forward, James Harrington leaves you with 3 questions. Do you truly understand what you own? Can your portfolio generate enough income to survive a multi-year downturn? And are your decisions driven by discipline or by emotion? Because in 2026, the market will separate owners from gamblers. Owners will collect income and sleep at night. Gamblers will react to noise and pay the price. You now have the warning. You have the framework. The only thing left is discipline. Because in the world that's coming, standing still isn't safe. Standing still is falling behind.